We've arrived at the last section of the mentorship, ladies and gentlemen, models and risk management. Now we went over core concepts, right? Our foundation of this mentorship. Then we went into those market maker models with time frame alignment, very important. We know how to trade the buy side and the sell side of the curve with this, and wrapped it up with that top-down analysis, right? That long-term, intermediate term, and short-term perspective to finish off the complete model. So we're going to talk about that universal model right now. Let's get into this lesson. This universal model is statistically the highest probability bread and butter model, guys. So universal for weekly range traders, so swing traders, right? We have those models for intraday traders and even scalpers, because we know price is fractal and it works on all time frames. It is universal for all kill zones. We can use the New York kill zone, the London kill zone, and even the Asia kill zone. And it is universal for all asset classes. However, kill zones can vary depending on the asset class. It works on Forex, it works on index futures, it works on stocks, and it even works on crypto. The MMXM traders model. So we're going to go over a few points on this. We've got that premium and discount levels, right? The PD arrays, external and internal range liquidity, and the relationship between them. Then relative strength analysis. This is optional, but it will increase your probabilities. Then continuation purge, so a buy program or a sell program activation. Then time frame alignment with the market maker models, right? Down or up close candles will now support price, and PD arrays in line with the draw should hold. And then eventually premium and discount of the range, and that mitigation blocks for pyramiding your trades. So let's start off with time frame perspectives, right? That long-term, intermediate term, and short-term perspective. Reiterating again that long-term perspective is the why price should go where it is going, right? And think about that external to internal range and internal to external range, right? Then intermediate term perspective, this is how price should get there, right? We want to line up all these perspectives together so they are high probability. And then that short-term perspective, that's our entry and our trade execution idea. So again, long-term perspective, draw on liquidity and higher time frame PD arrays. Intermediate term perspective, structure and continuation purge. And then on that short-term perspective, we got those market maker models and your entry. The long-term perspective, intermediate perspective, and short-term perspective timeframes are going to vary depending on the trading style you're using between a scalper, intraday, or a weekly or swing trader. So building back on those time frame perspectives, on an intermediate term perspective or an ITP, external to internal range liquidity is the most forgiving, because even if you have a wrong bias, price can draw to internal range liquidity before going into the opposite direction. So you can be wrong about your bias and still make money, whereas trades framed from internal range liquidity require a stronger bias. So first of all, we're going to talk about that swing trader, right? That weekly range trader. We've got our long-term perspective where we'll use the monthly time frame, and we can also use the weekly time frame if the monthly is not clear enough, and this will be our drawn liquidity and our higher time frame PD arrays. Then we're going to go to that intermediate term perspective, right? We're going to use our daily structure and continuation purge, and then on the short-term perspective, we're going to use a 1-hour market maker model and entry technique. Psychological profile for that weekly range trader or swing trader. You prefer to hold your trades for the weekly range. You can hold trades overnight or even multiple days, which means you are a patient person, right? If you cannot spend too much time on the charts, this is a better profile for you. So over here we got that Euro Canadian dollar monthly chart, right? We're going with that weekly range trader, that higher time frame, aka swing trader. And just take a look at this chart right now. What do we see? First of all, we're going to think about external and internal range, right? Where is external range liquidity been taken, right? We've got this low down here, extended out in time, and we see this purge on sell side liquidity over here, which means from external we go to internal, and we have our draw on liquidity, right? We want to draw into this internal range monthly fair value gap. This is where our eye goes to, and this is where our bias is for the draw on liquidity. So that monthly fair value gap draw. Going in from long-term perspective, right? think about those time frame alignments, we're going to go to our intermediate term perspective, which on this occasion is the daily time frame, right? Because we're swing traders, so we want to have our daily time frame in line with our long-term perspective, which is that monthly drawn liquidity. So we're waiting for this buy side, this sell side liquidity to get liquidated, right? And going into a buy program. And what does that look like, right? We need to wait for those sell stops to get purged, which happens down here. And then before we get in line with our long-term perspective, we want to see a break in market structure, which happens over here, right? So furthermore, we know we are in a buy program starting from here, bullish order flow on the daily time frame. Our intermediate term perspective is in line with our long-term perspective, and now we can look for continuation trades and even continuation purchase, which means it will take out sell side liquidity and continue up into buy side liquidity. This is our intermediate term perspective, right? So in this area over here lies our opportunities once we go in our short term perspective, and our short term perspective in this occasion is the 1 hour time frame. So over here we got the Euro Canadian dollar 1 hour chart, right? We're gonna go over what we see over here. We got that market maker buy model, right? We start off with that original consolidation, then we have accumulation phase 1, accumulation phase 2, and what do we need to wait for before we go into buy side of the curve? We want to hit a higher time frame PD array, right? So we need to wait either for sell side liquidity to get purged or hit a higher time frame PD array, which could be a fair value gap or an order block, for example. Now we see this purge on liquidity, right, on that daily time frame, that long wick we saw in those previous slides. Now after this we have a buy program activated, right? So we wait for our short-term perspective to be in line with all our other perspectives, like that long-term perspective into that monthly fair value gap, right? And then our daily structure into that bullish order flow. And now our 1 hour time frame breaks structure too, and we can be confident all time frames are aligned and we can go look for a buy setup. So where do we look for? We outline our premium discount, right? We outline our PD arrays, and how does that look like? So over here we outlined that 1 hour order block right after that break of structure. This is a very good area to get in on a trade, and remember we are swing traders, right? So we can hold our trades a couple of days, so we can enter on that order block and sit in this trade for 1 or even 2 days before we hit our target. And we can see over here we've got a first opportunity to get in on this order block after that break of structure. Now there is a second opportunity to get in, and think about that new PD array, right? That redelivered rebalance PD array, that BPR, so a balanced price range, right? Because we have this candle go up, go down, and then the next candle going up once again, creating a balanced price range over here, and thus creating a breakaway gap, right? So now we know why there are breakaway gaps. A big order block has been formed over here, right? All these consecutive down close candles is a bullish order block, and once we trade above it, we can use this one again as a support, right? Because all down close candles should support price up when we are in a buy program. So back to the daily time frame, right? First of all, we had the sell stop rate into a break of structure, then that daily continuation purge over here, and then we have another daily continuation purge over here, which makes for another opportunity on our lower time frames. So back to the 1 hour, right? And this is the second stage of that daily continuation purge. So we had one occasion first, now we're going to the second one. Again, market maker buy model on your short-term perspective, right? So original consolidation up here, accumulation phase number 1 over here, accumulation phase 2, and even a third accumulation phase until we purge that sell side liquidity, right? Now we want to see a buy program activated after we purge that sell side liquidity. So buy program activated, right? Below an old low, we've got that break of structure, and now what we're gonna do, think about previous lessons, right? We're looking for low resistance liquidity, failure swings, right? Over here, failure swings up here, and then eventually failure swing up there. So all engineered liquidity on sell side of the curve, right? And then we're going to use those mitigation blocks from the sell side of the curve, outline them in time to the right, and we can use that with fresh discount arrays. Price can trade up higher, right? So outlining those mitigation blocks from the sell side of the curve, extend them out in time, and you can see clearly after that break of structure, every down close candle should support price up higher, right? Because we're in a buy program after clearing those sell stops. Now we use from the sell side of the curve, we use those mitigation blocks. We've got an order block over here, price supports it higher. Another order block formed in line with that mitigation block, right? That is making it even higher probability, and then price keeps climbing up and up and up. Eventually we purge these highs, so we can have another accumulation phase, right? Price is not going from one low to a high in one motion. You have those market cycles, remember? You have that expansion, consolidation, and then another expansion again, right? So this mitigation block over here, extend it out in time, and we start to accumulate on top of it on that order block, and eventually we're reaching up higher into here, taking out external range liquidity. We've got a breaker block formed here. Why is it a breaker block? Right, because we take out sell side liquidity before we break up higher, so that's called a breaker block. Price finds support over here and eventually clears this 1 hour market maker buy model. Adding premium and discount arrays once again, right? We want to go from discount into premium and vice versa. So all these entries down here were the most high probable entries. As soon as we go above premium, it starts to decline in probabilities, but if that market maker buy model is still intact, there's still opportunity to get in, even up here in 75% of the range, right? Ideally, you want to get in down here, or down here, which is still in discount, right? But there's another opportunity here with this breaker block. Right, so over here we've got a Euro USD monthly chart, right? Let's see what is happening over here. What is the current order flow? What is the premium and discount levels, right? So let's outline those premium and discount levels first. We're coming from discount, right? From this low, and we're entering premium levels over here. Now, does it make sense we go down from here, right? We're looking for mitigation blocks. We've got this monthly premium mitigation block in line with this area over here. What do we have over here? Again, right, that redelivered, rebalanced PD array, right, down, up, next candle down. We can see this area is balanced already, so no need to go up higher if we are bearish. So we can see this rejection, and it is in line also with this mitigation block. So long-term perspective, we are bearish, right? So going into our intermediate term perspective, we can see this monthly premium mitigation block from the previous slide, right? Extended out in time, and we can actually see price action is starting to break down. And how does that look like, right? External range liquidity has been taken, so we go from external back to internal. And where is our internal range liquidity? In discount, right? We've got these fair value gaps down here and even down here. So after that break of structure over here, right, we can see this internal range liquidity is our draw, and we can even see this high being purged over here, which is a daily continuation purge, right? So over here, this is where our opportunity lies on the short-term perspective, because we have a intermediate term high potentially forming over here, which should not get rated anymore, right? Think about that market structure. And then in the lower time frames, the short-term perspective, we can find our setup. So right now we're on our intermediate term perspective, right? And we have that in line with our long-term perspective. Once you trade below here, we have that 1 hour market maker sell model completed, and let's look at how that looks on the 1 hour time frame. So over here we got that 1 hour Euro USD chart, right? Market maker sell model is forming, right? Over here, that daily continuation purge. So we have a sell program activated, right? And once that sell program is activated, all up close candles will now support price lower. So all bearish PD arrays should also hold and bullish PD arrays should fail, right? So start off with our market maker buy model, or market maker sell model rather, right? We've got that original consolidation, and then we hit that external range, and then we want to go down back into internal at least, which is over here. And this is why sometimes if your bias is incorrect, if you wait from external to internal, it's more forgiving, right? Because we know price is more likely to draw into discount first. And even if we draw into here and we start to go up again, if you find an entry from up here or even up here and you can draw into here, you can make money, as opposed if you're waiting for this POI to get hit, right, and then try to trade external again, that you need to have a real clear bias. So over here we see a break of structure, right? Sell program has been activated because we went into external range liquidity. Order pairing happened up here, right? Those buy stops have been paired up with sell orders from smart money. Now we're breaking down and we can find an opportunity. And remember, all up close candles should now support price lower. So over here we've got this PPR, right? This redelivered rebalance PD array. Once again, this up close candle should support price lower, which it does, right? We hit it over here. This BPR is being respected, and that is an opportunity to get in on a sell trade. Another set of up close candles over here. This is a bearish order block once again with a fair value gap, so making it even higher probability, right? We tap that order block slash fair value gap combination over here, and we start to decline even further. What do we form over here? Another order block, right? All up close candles should support price lower, which it does, right? We still have not completed the market maker sell model down here, right? Because we are not trading below this external range yet. Price turns back into premium once more into that bearish order block, and then finally we purge that market maker sell model and continuation lower. Next up, we're going to be talking about intraday traders. So now our long-term perspective will be the weekly or the daily chart for our draw on liquidity and higher time frame PD arrays. Our intermediate term perspective will be 1 hour structure and then continuation purges, and our short-term perspective is going to be on the 5-minute time frame where we look for our market maker models and entry execution. Psychological profile for intraday traders. You can hold 1 or 2 sessions or hourly targets. You can hold trades for about 3 to 5 hours, and you prefer to be in and out on the same day. And personally, I like to be an intraday trader. We've got this British pound, Japanese yen weekly chart, right? Have a little look, where are we going and where are we coming from? Why? This is the why, right? The long-term perspective. So if you saw that external range liquidity being taken right to the left of here, we've got that external range purge. So where do you see your eye go after external? We know this, we go to internal range, right? So we want to go to internal range liquidity, which is this fair value gap on the weekly time frame. So after we take this buy stops, our bias and draw on liquidity for the long-term perspective will be that weekly fair value gap. Now, how does that look like on an intermediate term perspective? We want to be in line with the long-term perspective, right? Our intermediate term perspective needs to go bearish too, so we need to wait for a 4-hour market structure break. Our range high from up here after that buy stop rate until these lows down here, right? We are in premium over here. So after that 4-hour market structure break, we're also leaving a fair value gap behind, which could be an opportunity to get into a sell, right? So after that market structure shift on the 4-hour, our intermediate term perspective is in line with our long-term perspective, right? So now we wait for that continuation purge to get in, right? This turtle soup over here. So from here on out, we can have a sell program activated, right? And we can see that on our lower time frame, and we'll be using a 15-minute time frame in this occasion. The market maker model on the 15 minutes starts down from this low, right? So from external back to internal range. And again, reiterating, right? If you have external to internal, it's more forgiving, because even if the bias is wrong, you can still get into that discount level. So we got that 15-minute time frame over here. So now we're on that short-term perspective, right? So we had that long-term draw on liquidity. We had that 4-hour being in line with our bias from the long-term. And now we wait for that purge on the 4-hour, which happened over here, right? As soon as this gets stop hunted, what do we get? We get a sell program activated, right? So now after this purge on liquidity, all up close candles will now support price lower, and the bearish PD array should be respected and the bullish PD array should fail, right? So we have this market maker sell model formed over here. So all time frames are aligned. We wait for that break of structure, short-term perspective, right? Over here. Then draw out your premium and discount levels, right? From this high down into this low. If we want to return back into premium, we have to wait to go above this 0.5 line, this 50% line, right? Over here. And then continuation lower. And if you think back about the previous lessons, think about the silver bullet. Can you spot it over here? We will still outline it, of course, with annotations, but first of all, first stage of distribution happening over here, right? In this breaker block, coupled up with this bearish order block now, and price is continuing down lower. into a second stage of distribution, right? Forming another breaker. Why is this a breaker? Because we are rating buy side liquidity over here, right? Does it make sense? Yes, it's a high resistance liquidity run. Remember, that's against our order flow. So we're gonna go for all those lows down here, those failure swings, right? Low resistance liquidity. And then we form a BPR over here. So what do we have above that BPR? Breakaway gap, right? Because now we know that PD array, that redelivered, rebalanced PD array over here, make sure we don't have any more price action coming up in here, thus leaving a breakaway gap. Now, can you spot that silver bullet? Premium and discount again, and then in the right time frame, right? We're gonna talk about this a little bit, right? Short-term perspective, bread and butter setup happens in New York kill zone, right? The highest probability setup between 8 a.m. and 12 p.m. and we have a continuation profile, right? Because we already took out buy stops, right? This is important. And now our up close candle support price for going lower, and we can get in either on distribution phase number 1, or we can get in on that silver bullet, right? That distribution phase number 2, and wait for that intermediate term high to be formed. So can you spot that intermediate term high, right? This one over here. It's a high resistance liquidity run. We have a short-term high to the left of it, and then a short-term high to the right of it, thus creating that silver bullet, right? Here outlining it again with annotations. Low risk sell happens over here, right? The first return back into that premium level, then short-term high formed over here. This is an intermediate term high after we form another short-term high to the right of it, right? But with the silver bullet, we can get in on this redelivered, rebalanced PD array. So second stage of distribution, silver bullet, perfect entry over here. You could have entered on this order block too, right? But this here is the silver bullet. Another way to make it even more clear, right? We can outline our mitigation blocks from the buy side of the curve, extend them out in time to the sell side of the curve, and then we wait for those fresh PD arrays to get formed, right? So we have, for instance, over here we have a fair value gap formed inside this mitigation block. Over here we had this mitigation block from the buy side of the curve, now having a bearish order block over here, and then the same over here we have that BPR formed around this mitigation block, and we can say this is the silver bullet and it is high probability because it's lining up with those mitigation blocks. We got a British pound Australian dollar daily chart, right? We're on our long-term perspective, and we're not going to talk about the New York session this time. We're going to talk about Asia session and London session. Why? Because it will show that this model is universal, right? We are talking about a universal model. So what is our long-term perspective, right? What did we do over here? Let's zoom in a little bit. We got our discount into premium range, right? So what happened prior to this up move? We got that external range liquidity purge, right? Old low sell stops. Now, where does your eye go immediately? Once again to internal, right? Every time external to internal, internal to external, right? So we got that daily fair value gap as our draw on liquidity. Now we have our long-term perspective established. Let's go to our intermediate term perspective. So if we trade a daily time frame as our long-term perspective, we have a 1-hour chart as our intermediate term perspective, right? So we need to wait for a break of structure on our intermediate term perspective, which is that 1-hour chart. Over here we've got some swing low purges, right? So same with the swing traders waiting for a daily continuation purge. Over here we wait for a 1-hour continuation purge of a swing low or a swing high, and now in this occasion we wait for a swing low purge because we are bullish, right? Our draw on liquidity is that fair value gap on the daily. So we got two different kill zones. So we'll zoom in on both of them to see that this model is universal. So let's first off start with London kill zone, right? So we wait for that intermediate term perspective purge, right? That 1-hour swing low purge. It happens down here. We wait for time, right? London kill zone, 2 a.m. to 5 a.m. What is our draw on liquidity? We are waiting for this 5-minute market maker buy model to go into buy side of the curve, right? So original consolidation has been established to the left side of this curve, sell side of the curve, until we swing, take out this swing low, right? This 1-hour liquidity purge on the sell side. Then waiting for a break of structure, as always, and our buy program has been activated. Now, when a buy program is activated, all down close candles should now support price higher, right? And all bullish PD rays should hold and all bearish PD rays should fail. So over here, break of structure, right? First indication we're going into a buy program, then a very solid break of structure up here. And remember about that low resistance liquidity, right? We're looking for failure swings and equal highs and equal lows. So we're going into buy side of the curve. Now let's outline our PD arrays. We've got this whole set of down close candles being a bullish order block, right? So we're in a buy program, so all down close candles should support price up higher, right? And this is the highest probability order block, right? Because we take out sell side liquidity and break up structure afterwards. So you shouldn't frame your trades on these down close candles down here, right? Because we're still not leaving this area. And then until we do leave this area up here and higher, then we can use the other down close candles, right? So that's a London session trade. Now let's focus in on that Asian session, which this universal model should work on too, right? So again, 1 hour swing low, that liquidity purge, right? So after we have a liquidity purge on the sell side, our buy side of the curve is activated and we have a buy program, right? So over here, buy program has been activated below this low. So again, all down close candles should support price up higher afterwards, right? We break structure and then we look for our setups. So bullish order block in our kill zone, important, right? We need to stay in our kill zone. Over here, bullish order block. We've got a OTE retracement too. So take your Fibonacci from this low to this high, and we see we hit that sweet spot, that 0.705 level perfectly, and then we continue up into our drawn liquidity. So the drawn liquidity is still from our long-term perspective, right? The why should price go there, right? We already did external on our higher time frame. Now we're going to go to internal, and that is still our drawn liquidity until we reach it. So now we went over that Asian session kill zone, right? That OTA entry over here and this order block supporting price to go up higher. We still have that engineered buy side liquidity, right? Because we had that failure swing up here, right? Because this high is still not taken out. So price goes back down, back into discount, right? Because at this low to this high, so from this premium high to this discount low, we wait for price to get in our discount levels, which is over here. We've got this beautiful 5-minute fair value gap in discount. Does it line up with our kill zone? Over here, not yet, but price dips in one more time at the start of the kill zone and even comes back one more time around 4 a.m. to continue up higher. You could have gotten in at the start of the kill zone, right? And then a partial above. Buy side liquidity is always smart to do, and it even comes back one more time around 4 a.m. to continue up and reach our long-term perspective target, right? That drawn liquidity, the daily fair value gap. With the market maker models, we're outlining those mitigation blocks once again to make it even more clear, right? We want those discount fair value gaps, those discount order blocks to form in our mitigation blocks from the sell side of the curve. So sell side of the curve, we've got this mitigation block after that break of structure, right? So our mitigation block is in line with that order block inside our time zone, right? Inside our kill zone. So that's a high probability entry. Then again over here, this should be a bearish order block, right? But now it's being used as a mitigation or breaker block on the buy side of the curve. And then we had that 5-minute fair value gap formed inside our kill zone. And then price continues up, completing that failure swing, taking out buy side liquidity, and eventually going into the daily fair value gap, which is internal range, right? So wrapping up that universal model, now we're going to talk about those scalpers, right? So it's all fractal, time is fractal. The swing traders use those monthly and weekly charts. The scalpers use that 4-hour chart as their higher time frame. So our long-term perspective is going to be the 4-hour time frame, but we can also use the daily time frame when the 4-hour is not clear enough. And we'll use this again as our drawn liquidity and our higher time frame PD array. Then we're going to intermediate term perspective once again, and this time we'll use a 15-minute structure and continuation purge. And then our short-term perspective or entry model is going to be on that 1-minute market maker model and entry. Psychological profile for a scalper. We cannot hold trades for very long. We tend to panic and close 5-minute entries too early, right? prefers to be in and out within the session or within a couple of hours and is impatient. And there's nothing wrong with having this psychological profile. It all depends on your personality. Me personally, I cannot hold trades for weeks or days, right? But I'm also not a scalper, so everybody has a different personality. Right, our long-term perspective, we're going to use that 4-hour time frame. We've got a British pound US dollar chart, right? First of all, where are we coming from and where are we going? We have to ask the why, right? Long-term perspective. So we've got all these failure swings down here. So we have a clear draw on liquidity, right? Do we have a external range liquidity purge? Yes, we do, right? We've got this purge over here on our long-term perspective. So now what do we want to do after we go external? We want to go internal, right? So we got that break of market structure down here. We have this fair value gap down here. So even if it does not trade lower and lower, there's an opportunity down here. And even this purge up here, we can look for more opportunities. And we have another purge down here until we reach those low resistance liquidity runs down here, right? Those failure swings. So where's that 4-hour turtle soup happening? That external range liquidity rate. We've got one over here and we'll zoom in and look how that looks on the intermediate term perspective. So now we're diving into our intermediate term perspective, right? And with our intermediate term perspective, we want to be in line with our long term perspective, which is a draw lower, right? Our draw on liquidity is lower. So we can see this liquidity purge up here. So we're going from external back to internal, right? We wait for a market structure shift. So our intermediate term perspective is in line with our long term perspective. We can see initial break of structure happens here and this market structure break solidifies this bearish order flow, right? So over here we're trading lower and lower and lower, still not hitting that draw on liquidity, right? So now we wait for what? A 15-minute purge on buy side liquidity, right? We look at these highs over here, relative equal, right? This is low resistance liquidity, so we want to see this go before we want to trade lower. So we have that 15-minute continuation purge. And now it's time to go in that short-term perspective, right? We're going to use a 1-minute time frame to look for our entry setup. Market maker sell model will be in this area over here, right? From this range low to this range high, because we purged that 15-minute time frame over here. And we're going to dive into the 1-minute time frame and see how that looks like. So we got that 1-minute time frame over here. M15. 15-minute time frame continuation purge, right? It is all fractal instead of a 4-hour purge or a daily purge. Now we're looking at that 15-minute purge because we are scalpers, right? Again, market maker sell model is completed once we take out this original consolidation and that sell side liquidity down here. Outline that original consolidation, accumulation phase number 1, accumulation phase number 2, and smart money reversal up here. So what happens after we take that external range liquidity? We are now activating a sell program. So again, all up close candles will now support price lower. Bearish PD arrays should hold and the bullish PD array should fail. And then we are in sell side of the curve, right? So we're waiting for that break of structure on our short-term perspective. It happens over here. We want to be in the correct time zone, right? I'm going to outline that later, but we want to be, as I can see down here, we are in New York kill zone, right? So all up close candles should now support price lower. And we can see that over here. Bullish candles over here are now a bearish order block. Another bearish order block here with a fair value gap. Another bearish order block. Another one. And lastly here we got that fair value gap again and keeps declining lower and lower and lower. And you can see all up close candles are supporting price to go lower. We're going to once again use those mitigation blocks right from the buy side of the curve, extend them out in time to the sell side of the curve, making it higher probability, right? We want to see those fresh PD arrays form on those mitigation blocks from the other side of the curve, which happens over here, right? We've got that mitigation block from the buy side of the curve, which would be a bullish order block in this occasion until we go into external. Now we extend it out in time to the right. We've got that fair value gap here with that order block, and you can see price is neatly going down and respecting those areas too. Now I'm wondering if you can spot something more, and I'll give you a few moments to look at this chart. Do you see what is forming over here? And I'll give you a hint. Think about second stage of distribution, right? Got that silver bullet formed, right? So we have that short-term high, longer-term high, and a short-term high to the right of it, that low-risk sell. We break structure, and once again we have that short-term high here, intermediate term high formed here, and then that silver bullet forms in that second stage of distribution. So multiple areas where you can get in, but this is the silver bullet area. Right, so another example we're gonna go over. This time we have E-mini Nasdaq 100 futures chart. We are in bullish order flow, right? So what are we waiting for? Internal to external and external to internal, right? So we know from the higher time frame we are bullish. We're coming from this internal range liquidity fair value gap. So how does that look like on our 4-hour perspective? We're still on a long-term perspective, right? Because our intermediate term perspective will be a 15-minute time frame, and our short-term perspective will be a 1-minute time frame. But over here, we reached that discount fair value gap, right? On the 4-hour over here. So we want to go from internal to external, right? We know daily order flow is bullish. We are in a discount array, and with this discount array hit, we can continue up into buy side liquidity and eventually run those buy stops. So our draw on liquidity for our long-term perspective has been established. Now let's dive in to intermediate term perspective, right? We want to line up our intermediate term perspective with our long-term perspective. So over here, we've got a break of structure over here, right? So our intermediate term perspective is in line with our long-term perspective. We can see a 15-minute continuation purge, and I will zoom in a little bit over here because you can't quite see it clearly down here, but we take out this swing low with this candle over here, and thus creating that continuation purge. And with that continuation purge, we can now start to look for our short-term perspective entry model. Right, we got a 1-minute time frame right now. We waited for that 15-minute continuation purge, which happened over here, and you can see it a little bit better now because we're in the 1-minute time frame. Buy side liquidity, our final target as a scalper, right? We're not holding for the whole day. We want to go in and out with our market maker models. So market maker buy model has formed after we create this low. We purge that sell side liquidity and thus going into that buy program. After that sell side purge, we break structure up here, and then after we activate a buy program, what happens next, right? All those down close candles should support price up higher. So we have a bullish order block formed over here. Another BPR over here, right? That redelivered rebalanced PD array. So we know this is a breakaway gap. Using sell side of the curve, right? Again, with those mitigation blocks, we use it into the buy side of the curve. In this occasion, it's a breaker block because we took out sell side liquidity down here, right? And then breaking up. We have another bullish order block formed here. And then we continue up into this high. Now we're going to do some more additional examples so we can outline even better how this forms and all the time frame alignment with this universal model. We got a British pound Swiss franc daily chart. Right? We go from external to internal. This is our long-term perspective, right? This is the why we should go there. This is where we start off. So we can see this external range liquidity being purged over here. The CE of this wick has been hit, so we're quite deep into discount. So after that external range liquidity purge, where do we want to go? We want to go into internal range, right? So we got this fair value gap as our drawn liquidity. Now our long-term perspective has been established. Going into our intermediate term perspective, we know our long-term perspective, we have that internal range liquidity daily fair value gap. On our intermediate term perspective, we got all these failure swings, right? So we know where the liquidity is resting. So we have our bias confirmed after we break structure, right? So we need this external range liquidity purge, and then we wait for that break of structure, right? Over here, we have a break of structure. We have those engineered buy stops over here. Over here, we have no kill zone yet, so no trade yet, right? Because we have a stop hunt over here on the 1 hour, but it's outside of the kill zone, and we really want to be in our time zone before we execute a trade, because outside of kill zones, the probabilities reduce drastically. So over here we see a 1 hour stop hunt, again on our intermediate term perspective. And now we dive into our short term perspective, right? Now we have that 5-minute time frame. Again, think about that long term, intermediate term. They're both in line right now because we broke structure, right? On the intermediate term, drawn liquidity is that long term perspective daily fair value gap. And now we wait inside our kill zone for a break of structure and a liquidity purge. So we have that 1 hour stop hunt, that liquidity purge of sell side liquidity. So buy program has been activated and we wait for London kill zone to start. Yeah, not before, we wait for our kill zone. So now all down close candles should support the price up higher, right? So we can see that over here, got a bullish order block, another one formed over here, and this is all inside the kill zone, right? So that's important. Price moves up again, forming another bullish order block, continues up again, hitting those buy stops for order pairing with sell stops. Now over here, we did not quite reach our draw on liquidity, right? Over here. So we have engineered buy stops for the next kill zone. So the draw is not reached yet, so longs are still valid. Once again, you can draw out your mitigation blocks from the sell side of the curve into buy side of the curve, right? So over here we've got a Australian dollar, US dollar 1 hour chart. Again, we're gonna do another example. This is more of a scalper example, right? Because we are on our long-term perspective on a 1 hour chart. So what has happened over here? We've got failure swings, right? So we have a draw on liquidity down here. What happened prior? External range liquidity, right? Buy stops have been purged up here, thus making us go into sell side of the curve after that happens. We've got some sell stops down here with those failure swings, right? So low resistance liquidity run. And now we dive into our lower time frame. So over here, 5-minute time frame, we wait for a break of structure, right? Important. So break of structure happens down here. Sell program has been activated because we took out that external range liquidity, right? So all up close candles should now act as a resistance and support price down lower. Order blocks, fair value gaps, and turtle soups are high probability above here, right? Above this area, because why? We are in premium, right? So from this discount low into this premium high, everything above this 0.5 level is higher probability than below it. So those PD arrays below this 50% level are still valid if the draw hasn't reached yet. However, there are a little bit lower probability because we're not in a premium level, right? So try to always get in on a premium level if you're selling, and if you're buying, you want to be in a discount level, right? We can see all these bearish order blocks supporting price to go down over here too, over here, and so on until we reach that draw on liquidity, those sell stops. Again, outlining from the buy side of the curve into sell side of the curve, our mitigation blocks, right? Are we having new PD arrays formed inside those mitigation blocks and making it higher probability for price to resist that area, right? We have that fair value gap here. Inside this mitigation block, we have this bullish order block being formed inside this mitigation block, and so on over here, mitigation block into this bearish order block again. Down here, another mitigation block, and we can see all these PD rates formed here are still holding price to continue down lower and complete this market maker sell model. So over here we've got an Australian dollar, New Zealand dollar daily chart, right? And this is going about relative strength analysis, right? So over here, if we want to trade AUD USD, for example, or NZD USD, we go to Australian dollar, New Zealand dollar to see which one is more weak or which one has more strength. And over here, you can see AUD NZD is extremely weak, right? Because we can see price action continues to dive deeper and deeper, making NZD stronger than Australian dollar. So in this occasion, Australian dollar is weaker than the New Zealand dollar. So you had better shorts on AUD USD over NZD USD.